Hey everybody, thanks for checking out this episode of the Notorious Pod. This is Rob Hahn, and today's episode, I will be having a wide-ranging conversation with Drew Meyers of Geek Estate Mastermind.
This is Notorious POD, the podcast for the best-informed people in the real estate industry. Rob Hahn is your host, and Notorious is where the real estate industry comes for real talk with no bullshit.
Hey everybody, welcome to an episode of the Notorious Pod. This is your host, Rob Hahn, and today I have a very special guest with me. We're not sure what we're going to talk about, but I'm pretty sure we're going to find plenty of things to talk about. Let me introduce Drew Meyers of Geek Estate Mastermind. Drew, how you doing?
I am awesome. Good to see you, Rob.
Good to see you. Where are you located, man? Where are you today?
I live 20 minutes east of Seattle.
Okay, but I mean, you were traveling though. I know that you were in California for a while. You were in Florida for a bit. Are you back home in the Northwest?
Yeah, we're back home. We were in California for 3 months early last year, February and through May.
Yeah.
And honestly, actually, we did toy around with moving to SoCal permanently. So
wow.
We might still come back to that. But as of now, we're in Issaquah, and we will find
cold and rainy.
Sun. Yeah, we will find some sun sometime soon.
You know what would be really ironic is if you ended up moving to Southern California like in July when, Seattle area is just gorgeous. It's beautiful.
Yeah.
Yeah.
I don't think, honestly, I mean, I grew up here in Seattle, and I don't think there's anywhere in the world that's better in the summer for that 10 weeks than Seattle.
Yeah. All right. So we could talk about literally everything because, we've been all over. But I thought we might start because of Geek Estate Mastermind, which I'm a member and you're the founder. I almost feel like it's one of the better places to kind of get a sense of the state of prop tech. So I would just keep it open-ended that way and ask you, what's your take on kind of the state of prop tech right now in early 2022?
Yeah, so I mean, part of the challenge with that question is prop tech is inherently a very broad topic that could span everything from traditional kind of real estate tech companies on the sales side of the equation to amenities for big multifamily buildings. Most of obviously what we both really talk about, more of our expertise lies on the residential side.
Right.
So, certainly one of those big topics that obviously has been discussed recently is Zillow's shift away from iBuying into the super housing app, which is actually something I'm writing about right now. I haven't published the article yet.
Yeah.
I know that was discussed on your and Greg's podcast with
a
Brian
little bit. And
well.
And then I wrote a big post about it during their Q4 earnings report.
Yeah. So I'm not actually sure what my conclusion is yet because I'm not quite done with that.
Do you want to talk about it on this thing, or are we spoiling?
We can come back to that. A little bit later in this podcast if we want to. Maybe obviously one overarching theme. I do think the market from a VC perspective is very frothy. Like there's still a lot of money being thrown into this industry, and I think it's pretty clear that over the last 2-3 years, this SPAC craze, what you want to call it. Pretty much every major prop tech company that has taken the SPAC has been devalued pretty significantly over the last 18 months. So I think it's clear that the public markets aren't really warranting the private market valuations that exist out there, and that is going to play out in terms of M&A and. That's one theme. I think the more interesting stuff is kind of where the interesting sectors, I guess, of prop tech would be.
So name them. What do you find interesting, man?
I've been a long-time bull on the entire property management industry, and I know you've done some podcasts that
yes, we have.
Pretty bullish on property management as well. On the prop tech side of things, most of that has kind of come out in the form of. Everyone calls them something different, but kind of the tech-enabled property managers. So think Zeus or Sexton Stays or Mint House or Lifehouse, Front Desk. There's Rabu is one we actually did a very long analysis on fairly recently.
We did a blueprint with them last year. Great guys.
So that category is super interesting. I mean, hard to scale because it does require boots on the ground. And actually, I was in Orlando 2 weeks ago for the International Builders Show, and I actually stayed at a Sonder unit in Orlando, which was great. But like, I mean, there's no staff on that. I mean, Sonder is by far probably the biggest in terms of inventory that's figured out that model and kind of removed the staff from the equation. But it's yet to be determined kind of if that model can really exist at massive scale. So that's one sector. I mean, obviously, you know, my background. I mean, prior to kind of finally turning Geek Estate into a business about 5 years ago, I mean, I spent 7 years in the travel industry working on a couple of my own travel startups, one of which was in the home sharing space. So I've long been a huge proponent of home sharing, and kind of off-market sublets are super interesting to me. There's a company called myplace.co, which is a very kind of a modernized version of what we were built a few years ago. Different product focus, but really the mission of enabling people to share underutilized homes and rooms within trusted groups is really the exact same mission that we had with Horizon. So I'm super interested in kind of helping that mission out. I mean, fractional ownership is another category that like I can't get enough of.
Okay. Okay.
So there's a lot of, I mean, obviously Picasso is the most well-known in that category, but there's a plethora of other players. Second Share is kind of a newer attempt that's adding rental. So I mean, the Picasso use case is those houses are not rented at all. Like they're owned by 8 owners, and like it's just for their private use. Right. Versus Second Share is helping you kind of use your home when you want to, but then rent it out the rest of the time. So they're still aiming to decrease that cost of attaining second home ownership, but with kind of a different model on the short-term rental side of things, which I think that's a...
So why are you so fascinated with these, Drew? I mean, what problems do they solve?
I mean, all of them solve different problems, obviously. But I mean, at the core, real estate it's where you live, right? It's where community is built. I mean, that's probably my overarching interest in real estate, and has been since I got into Zillow in 2005. Was kind of, that's where life is really built. And I'm community builder through and through, as you know. Like that's pretty much what I've been doing for my whole professional career. And if you really think about it, I mean, the strongest communities in the world are built through actual, like the people that are in your actual house. It's stronger than the office. It's stronger than a restaurant. It's stronger than anywhere else. So I think on the second ownership side, I mean, I grew up with a property down in the southwest corner of Washington in the family, and like we would go there, I don't know, a couple times a year for a long weekend or what have you with my dad and their family, and like literally those were some of the best kind of experiences that I still remember 30 years later. But yeah, I mean, I think the one other high level trend would be the nomadism. Like, I mean, the whole work from home dynamic that's obviously here to stay. Maybe not at the scale it is today, but like it's here to stay at way more significant scale than it was prior to COVID. I mean, that's obviously accelerating all these models that are kind of like interested or helping people better utilize these assets that have long been very significantly underutilized. So
I read an essay that you wrote a while back talking about friction, right, in real estate, and how you thought that maybe the prop tech sort of focus and obsession with removing friction from the transaction was misplaced. And it was interesting because, you know, Greg and I just did an episode with Brian Boero on industry relations, my other podcast, you know, talking about this a little bit, right? Because Brian Boero, 1000 Watt, you know, had said, you know, maybe this push button real estate thing isn't all that it's cracked up to be, right? It is like, it doesn't feel like it's better. And so it's kind of sort of seemed to fit. Like, what did you mean by that? Like maybe friction, that maybe we should have friction? Like what was your take on it?
I think a lot of it comes down to, it's not so much, I mean, obviously it is Well, I guess it comes back to what's the definition of better, right? Which you
right, which is something we discussed. Yeah.
But like, so I would guess it's better in most people's eyes if you were able to kind of buy a house with less friction. What I was kind of getting at is, I think people significantly underestimate like the actual merits of why that friction exists in the first place.
Okay.
And I think largely it feels like a tech elite problem. I mean, I don't know, entrepreneurs that are efficiency focused, and I mean they think about things very differently than the general public, like mass consumers. And I really don't. I mean, I don't really think there's a need. Like, does someone really need to be able to click a button and spend $1 million? Like, is that really something that people like are just itching to do? Like, are they just going to start pressing their button nonstop and buy $1 million homes? And like, I don't. But who's doing that, right? I mean, people that are multi-millionaires or billionaires do that, but most people, I mean, they're not spending their life's earnings in 30 seconds, or people wanted to get it down to 5 seconds.
See, I would argue they are, right?
Who?
So here's what I mean, and this was so let's actually get into this, because we touched on it during the Brian Boero episode, but we didn't really get into it. I'm saying you have to break the transaction, right, into multiple parts. It's not like, if you look at the transaction as a whole, then yeah, of course you're going to want some wait time, but there's sort of the initial discovery phase, right, and decision phase. There's the transaction execution phase. There's the settlement phase. There's the clearance phase, clearing, and then there's settlement, right?
Yep.
So I think the way I look at it is, people want to take time during the discovery and decision phase, right? So
Agreed.
take the $1 million house, right?
Which
I'm
is
about
every house here in Seattle.
every house, right? And it's 30-year mortgage, and I'm spending my life savings. This is a big important decision. Okay, I'm going to want to take my time making that decision. I'm going to want to take my time picking the right house, negotiating the right price, whatever it is, right? I'm actually going to really want to take my time. My point was, once you've decided, right, once you are under contract, then you want it done in 3 seconds. Right?
Yeah.
That's all. So the stuff that people are focusing on, where you're removing the friction from the decision phase, I think it's valuable, but it's not enormously valuable. The real valuable is, say you're the seller, I'm the buyer. We've come to terms. We said, okay, you know what? After weeks and weeks of searching, all of the mortgage financing getting set up, okay, I want to buy your house. You want to sell me your house. We want that transaction closed in 3 seconds with a push of a button.
Yeah. So
that's all I meant by it, right?
Okay. So I mean, if that's the definition, I don't disagree that like the decision friction is one thing, and like the actual everything decided, just go execute the thing.
Just the execution and clearance. Exactly.
Yeah.
Right.
So I think we're slowly going to get to that no matter what. I guess maybe I just take objection a little bit with the kind of like more public branding of kind of just buying a house with a click of a button and trying to make it, like, compare it to paying for your Netflix or your Uber ride, which is like $10, right? Those are very, very different things.
Right.
And yeah, consumers kind of think that they expect that, but I would really question of whether or not they would actually do that were it to exist.
No, I completely agree. Yeah,
I do. I think it's a little bit different though on the investing side. I mean, like companies like Arrived Homes, where you buy small shares and it's an investment. You're not living in the house. It's not $1 million. It's a couple $100 or a couple $1,000, depending on whatever you want to throw in. I think that obviously that is a click of a button already. Like I've done that, and that's a worthwhile pursuit, I think, to kind of enable more of those sorts of models to exist. But that's not home buyers buying their primary residence.
Right, exactly. And that's not a home, right?
Yeah.
And I think, so basically what you and Brian and I think most of us instinctively understand is, if I'm making a decision that's going to profoundly impact my personal well-being, right, for years to come, which is what a home is, right? Like, leave the price out of it for a second, right? Let's actually say we're billionaires. Okay. We could buy any home we want, sight unseen, sample, but snap our fingers, we could buy that home. Thing is, I still have to lay my head there, right? I still have to live there. That's the plan. Well, then I'm going to take my time, making that decision. And I think in that case, working with a great realtor who really knows the market, really getting the advice, all useful. And I will take my goddamn sweet time, right? As an investor, though, you're not going to live there. That is not a home. That's just an asset. And as an investor, to me, it's no different than buying Bitcoin. It's no different than buying shares of Tesla. It's no different than buying artwork, for investment, like speculation. It's no different. And all they're looking at is, all right, what's the character of the asset? What's my cash flow? What's my expected return? And once I say it pencils out, I'm willing to pay X for this thing. I want it done like this, right? And beyond that, so I think the reason why we're seeing so much of the action, for example, in the crypto space around like fractionalized ownership, tokenization, all of these things is because they're appealing to people who aren't going to live there. They're appealing to people who are making fundamentally financial decisions and they want it done real fast and they don't care. Like they don't need to walk through the house. They're happy with a video walkthrough because they're not going to live there. They don't care what it smells like. They're just buying it as a cash flowing asset. And all they need to know is what's the condition, what's the quality, right? Like, am I buying something that I'm going to have to repair, sink another $50,000 to repairs in 2 years? Or is this in good condition and I could rent it out or resell it, So it's like a totally different mindset. And I think it's one of the reasons why commercial real estate and residential real estate have always been so separate, right? Because you're dealing with completely different decision-making, decision trees,
Yeah, I mean, homeowner decisions are completely irrational, as I learned very early in my Zillow years. Versus on the investment side, I mean, you can talk sense into people if it's a monetary transaction,
right?
And I mean, I certainly think that kind of arrived homes, or I mean, Lex on the commercial side, this is like taking taking buildings public and selling smaller chunks of it.
Right.
Making that turnkey is a pretty interesting, like that's one of the big consumer shifts I've seen over the last 10 years. And I mean, my interest in real estate kind of goes back to my grandfather built our whole family wealth through real estate, and like back in the 70s or 60s and 80s, like that was a completely different equation that took an immense amount of work to like find the properties. You got to rent them out yourself. You have to do everything yourself, right? There's none of these property managers that really exist unless you were to pay exorbitant fees. And certainly the actual sourcing the deal, like there was no way to do that other than go pound pavement and find the deal yourself.
Right. I'll tell you what, man, there's one thing about this though, when you're listing it out, and I guess I kind of want to get your take on it. Does it bother you at all that most of this prop tech, most of the investment, most of the innovation seems to be happening, I don't know how to put this, like to benefit the already wealthy, right? So even when we're doing Blueprint, there was that one company that was trying to do like shared roommate type situation. I can't remember the name.
Pad Split.
Yeah, Pad Split, right?
Yeah.
Where their whole focus was, how do we enable lower income people to be able to find a place to live, right? Everything else that we've laid out is like investors, like I could, invest $1,000 into this fractional ownership thing. Yeah, but you're still talking about somebody who's got $1,000 to invest, right? Or, it's property management. Property management is something that is only of concern to landlords. Landlords, by their definition, are not poor, right? Nick, does that ever concern you that we're not seeing a whole lot of prop tech that's really aiming at how to make home ownership, housing way more available to, lower income, working class, middle class families and individuals?
It's definitely worrying for sure. The unfortunate reality is kind of market dynamics make all this work, and the ones that get the airtime are the ones that kind of are heavily incentivizing people to do specific things.
Right.
I think one category that would probably be in that realm would be what I would describe as like home ownership accelerators. So think companies like Landis is probably the most well-funded and known in that category. But something like Roots or Fleck, or I mean, there's multiple of these companies that are. Or Mike Schneider is working on Acre Homes, another attempt. It's kind of an alternative to a mortgage. And kind of, I mean, Diggs was a few years ago on the kind of finance side of things, and like they sold to Ojo Labs, so now that company now sits inside Ojo. But I do think there's certainly interesting opportunities, kind of qualifying homeowners or potential homeowners that haven't traditionally been able to get the financing, or like the credit scores suck or what have you. Like, but that's not the sexy opportunity that scales, right? Those are, I mean, there's a reason those people have bad credit scores.
Okay. In
some cases, right? So like repairing that is not the thing that the media wants to go talk about. And it's not I don't know, it's a difficult problem, right? I mean, same as pad split. Like pad split to me is working on solving one of the hardest problems in real estate. And like they're trying to house people that make like what, $25,000, $30,000 a year.
Yeah.
Right? That's
pad split to me is almost like a replacement for public housing.
Yeah, exactly.
You know? And I'm like, okay, what about the middle? What about the 28-year-old, couple, right? Like who's making $100,000 combined, and they can't they can't afford to buy a home, right? Like they're not the poor, right? They're not. They can keep renting for the rest of their lives, I guess. But I keep thinking about it. Like why aren't we seeing prop tech solutions to enable just far wider home ownership, right?
I mean the company I wrote about last week is called Homestead. I would put them in that category in terms of they're only in California, so they work with SB9, which is like the new zoning regulation in California. And like the proposition is go partner with Homestead. So if you're a current owner, you go you subdivide your lot, and Homestead does all the development. They build a new structure plus an ADU, and then they sell it, and then they split the profits. There's an interesting buyer twist, I think, to that of like picking a home and basically pre-sell your backyard, right? So like say the lot in San Diego is $1 million. I could agree to basically sell it to Homestead as part of the buying process. They'll go do the redevelopment, and then that lot's only going to cost me, I don't know, $600,000 rather than $1 million.
Yeah,
I would say it's only half the amount of land, right? But like, I still get the primary structure that you're really buying, anyways. So it's not a fit for every piece of property, obviously, right? It's not a fit for a townhouse that there is no land extra,
right? But
that's one of them. I mean, there's a lot of companies in this ADU category that's helping you build backyard structures, and unfortunately the zoning requirements are pretty prohibitive.
Right. I was just thinking like, dude, if you have an HOA, you ain't doing that. Right?
Yeah. But SB9 was, seeing a state, like the largest state in California do that at a statewide scale is pretty incredible. There's going to be some states that follow suit on that.
Yeah. All right. Well, like I said, it's just one of these things I very rarely have the opportunity to just think about like prop tech at a high level, right? Like from 30,000 feet up. But one of the things I do think about a lot is, why aren't we seeing the tech companies out there saying, hey, look, we've come up with a new manufacturing method, so you could buy a home for 150,000, right? Some new technology that speeds up, I don't know, or that allows, lenders to lend money out with no credit checks. Like something, right?
Yeah.
That where the specific goal is not, the urban poor. Like that's a real difficult problem. And frankly, that's probably a public housing issue, and not the super rich investors, but like that middle, And I'm just, as a whole, as a theme, I'm just not seeing a whole lot of action, a whole lot of energy in that, right? And it feels to me like that's the biggest chunk of the market, really.
It's certainly the biggest chunk of the market.
Right.
One thing that I feel like I've learned over my career is working in the middle sucks. Just in terms of businesses that focus on that middle ground really you end up serving customers that want the full package but won't pay for it. and like the incentives don't really align. I mean, certainly the web design industry works like this in terms of either you're a pre-designed template offering that's super cheap and no customization, or you're a full 10,000, 20,000 plus custom build. Anything in between, you get people that want the 20,000 build but don't have any money to pay for it, and like hence you're never going to be able to execute against that. I think the prop tech version of that is kind of, I mean, there are some very interesting companies like Pallet that builds kind of temporary shelters for, I mean, they're building homeless camps. There's like relief shelters for hurricane disasters or use cases for what they do. And I mean, they're cheap structures, kind of sub 10,000, right? But that is the low population. And then, I mean, there's Structure Ready is another company, which I actually just found at Orlando 2 weeks ago at the Builders Show. That's kind of a panelized approach. I mean, they're in the pallet category. There's obviously New Story that's doing kind of 3D printing with concrete, which is interesting.
Yeah.
But that whole middle ground of like that, call it, I don't know, 50,000 to 800,000.
800,000. How the hell is that middle?
Well, I mean, in Seattle, that's middle. Seattle, that's low.
Well, Seattle's just nuts. I mean, I'm thinking more like some clever technology-driven way. I'm saying like 200,000 and under.
Yeah.
You know, I mean, 200,000 at this hyperinflationary age we're living in feels like that's pretty affordable. You know what I mean? Like the median income is what, 55, 60,000 or something like that. Like if we could have reasonable homes, you know, for young families at around the $250,000 range, I think it'll sell like hotcakes, right? And I'm going, why aren't we seeing innovation and prop tech like really trying to address that to some extent? I don't know what that means. Obviously, if I did, I would start that company, you know, because here's the thing. I agree with you that there is this bifurcation, like either low end or high end. Being in the middle kind of sucks. At the same time, the best selling car is not a Mercedes, right? It's a Toyota Camry. You know, it's a Corolla. They're not total shit boxes. You know, they're not, 10-year used cars that only the very poor can afford, right? They're the middle of the road, reasonable, reliable for $35,000, like that kind of thing. And, like, I don't know what that looks like in our industry, in real estate. I certainly know it's going away,
One example, actually, that the founder just joined the gem a couple of weeks ago. There's a company called Bob's Containers out of Austin that's building homes out of shipping containers.
Okay.
I want to say the price point, I'd have to go look at the website to confirm, but I want to say they're starting at like 35 or 40,000, and like the bigger ones are 70 or 80,000. So obviously add land to that, whatever the cost of land is, right, wherever you end up needing a house. But I guess that would probably classify as your middle ground, right?
Right. And so you know what it is? It's that plus Starlink. Okay, hear me out on this. That Starlink thing. So I have Starlink in my cabin in Utah, right? It's mind blowing. It's really good. It's really fast. It's really rock solid, right? So you could get this container. So here's the theory, right? I'm a new grad, like I'm 30, my wife is 27, we're about to have our first baby, we've been renting, collectively make about $100,000, right? And we cannot buy a home in Seattle. There's no way. Can we agree? Seattle area, you're not buying a home.
Yeah.
Right? Okay. But maybe I have the type of job that lets me work from home. I will go buy land for $50,000. I'll get, what you just mentioned, right? Bob's Containers, right? I'll put one of those up, or a similar type of modular building, right? And then I have Starlink, so I could move out, 300 miles away, right? Something like that. You know what I mean? And maybe it's like, that's kind of what I'm hoping. You know what it is? I would love to see some prop tech entrepreneur come up with some way of saying, hey, I bought the land, right? And they come in with giant robot machines or whatever and just go, great, like boom, like late sewer, like boom, here's foundation, boom, here's the house, like you move in ready in 2 weeks. Do you know what I mean? Something like that. And oh, by the way, here's Starlink satellite already configured for you. You're ready to go. Like, no one's working on that, right?
I mean, someone's probably working on that. I mean, it's kind of like, would you put that in the category of commune? or like co-living. Because I mean, really, it's the community. You'd have to go do that in a community of put 40 houses together. Obviously, part of the challenge of that is, yes, someone could go buy land in the middle of Nebraska and put 20 houses in the middle of a field, but like there's nothing there. There's no infrastructure. There's no anything.
Right. So what I'm saying is, if there's a tech solution that says, look, it's raw land, right? However, when you buy your lot, here's this company come in and essentially stomp in, like the infrastructure. Do you know what I'm saying? Like, and build it out in 2 weeks, right? And with a prefab home, not like some, shitty like mobile home. I'm talking like decent modular, maybe built out of shipping containers, but it's a home and you own land, something. I'm not saying we've solved the problem. I'm just wondering why we're not, like, I haven't seen that. I know you haven't seen it. It just doesn't seem to really exist, Yeah. That's all. Right. So maybe it's anybody listening, because more prop tech entrepreneurs are likely to listen to this one because of you.
Yeah.
Maybe think about that, right? If you could solve that problem for that middle class, working class families, especially young families, millennials and Gen Z, who on the current path, they are not going to be homeowners. You know what I mean? Home prices are going up 18% a year. Their wages are not going up 18% a year. We have to solve this problem. And if you could figure out a tech-based solution to this, you're going to be billionaires. You know what I mean? You're going to make a fortune.
One other aspect of this that I do think is worth noting is I do think a big part of this is the kind of elite mindset that a lot of people in the United States have. Like the kind of the life of privilege, and not being okay with kind of a mass market, just slap a home down and like it's the same as every other home within 30 miles. I mean, like double wide trailers, right? I mean, they're $10,000 or something, and there's kind of I think there's a pretty broad stigma around like if you live in a double wide trailer, you're trash, right?
Yeah.
So I mean, I certainly think there's an opportunity to modernize, the same way Open Door modernized the like cash buyer scenario and made it acceptable for a normal person to sell their house for cash, and not just because they're selling to ugly houses and it's a total dump. If someone can figure out a way to make double wide trailers or modular or something like that cool, that does actually only cost $10,000, like obviously that is a pretty interesting opportunity from my perspective.
Yeah. And it has to be tech driven. That's where the innovation is going to have to come from. But hey, I know I wanted to ask you about something as well, so I want to do a hard pivot. Okay. We did a webinar through GEM, with Teresa Grobecker, talking about kind of blockchain, real estate, crypto, that kind of stuff, right? And I think that community is one of the more active ones on GEM. Is that right?
Yeah, I mean, this year the two tests we're doing are blockchain, and then we just did the affordable housing kickoff call last week, which actually was also very well. I think we had 35.
I couldn't make it. I had a previous engagement. How many people?
I think there was like 32 on that call, and I think on the blockchain one we had like 37 to 38.
Okay.
So there's definitely clear interest on both topics, but it's kind of like our test into should we do more programming and networking and kind of content around specific topics? But anyways, go on with
your... So my question for you is this. We've never really had a conversation about your take on where you see blockchain fitting into real estate. So where do you see blockchain fitting into real estate, Drew?
I see blockchain fitting in the very long-term equation. I guess is like I just think we're insanely early to this game, and there's not really any use cases that are to me generally applicable yet that blockchain solves. In the U.S., I mean, you're facing regulatory hurdles for mortgage and title and like the deed side of the equation, which to me that's the more interesting part of blockchain. But like it's going to be 50 years before U.S. counties change and go into a blockchain approach. So I mean, there's a reason all that activity is happening like abroad in the developing world, because that infrastructure and government doesn't exist in most places. So I mean, News Story is working on like blockchain mortgage, like a blockchain based mortgage approach for kind of a microfinance, more of like
Not
the
really.
microfinance industry?
I'm not really. I'm working with them. I'm trying to help them to come up with that. Not really. They've just done like selling NFTs to try and fund it because they're still charity based.
Yeah.
I hope they're working on a mortgage. I'd love to help them with that because what they're doing is pretty cool.
Yeah, I thought I saw some announcement like a month or two ago about a
No,
mortgage.
I talked to them about it. It's not quite that. It's more blockchain based funding. What they mean is they're selling NFTs of homes, in order to fund the development of to be able to build a home.
Yeah.
But I'd love to help them. I think that would be awesome. And that'd be a great project.
Yeah. So, I mean, I guess net, it's early, but like, I do think, there's going to be efficiency gains. And I mean, as you said, the decentralization component is interesting, but it's just, I don't know, in the States, I don't really see much happening anytime soon on the traditional title side of things.
And you're not seeing any action on that side, right? There's no...
I mean, on the actual title side, I have yet to hear about a county that's actually like going to migrate to blockchain.
Like, there's no vendor that's working with a county to say we're going to put your title system on the blockchain.
I feel like people have tried. I mean, I feel like people have pitched that idea to counties, but I haven't seen anyone succeed at it. That could be wrong. I mean, it's been a while since I've been in the county assessor and recorder's offices. But actually, like going way back, that was one of my first roles at Zillow was kind of research the whole property industry and like figure out how do we get data sources. And part of that was go direct to county offices. And back then it was still photocopies.
Yeah.
Right.
Take a drive, young man.
Yeah. So there's probably slightly fewer counties that are photocopy based today than 15 years ago, but I would guess a lot of that still hasn't changed.
Yeah. Yeah. It's just weird. I mean, where does it fit? Because there's like mortgage plays, but none of them are really doing, mortgage, right? They're doing more like crypto loans that they call a mortgage. The NFTs, like what Proppy and Natalia at Proppy are doing, it's super interesting, but it still feels real niche. Like that home in Florida, I think was, it was being sold by a crypto entrepreneur to a crypto entrepreneur. Right. I'm like, okay, that's a pretty narrow area. At the same time, she just needs to prove that this can be done, and I think she did that. It's real clever. I don't think there's any question that it kind of can be done. I think there's a question of why should it be done at broader scale. Because the reality is pretty much everyone, if you're going to buy a home with crypto, you're just going to convert it into cash. Like one way or another, the crypto is going to be converted to cash. Correct. Either right before or right after the deal. And then what's the point? Then it's a marketing gimmick, right? Like you're not really buying a home in crypto. You're just selling. It's the same way if I had, I don't know, $1 million in stock and I went and sold my stock and bought a house, it's like the same thing. Right. Yeah, I don't know. Like I keep looking at it. I think there are some areas where it's really going to make a difference, but somebody's got to build it. Like I haven't seen it yet, So
I think someone has to tell the right story around it is I think what's missing.
But what's the story? Like what would be compelling to you?
I think that's the trick, right? That's what no one has solved. Like I haven't heard a compelling story of why blockchain has to happen today. And I think that's part of the reason that it hasn't happened today.
Yeah. Cool. All right. Well, like I said, I just wanted to have a wide-ranging conversation just about the state of prop tech and where you see things. What are you working on, like right now? What are you excited about for GEM?
A big chunk of my time is kind of going back to in person. So I mean, 2 years ago was going to be the year I did 12 dinners around the country. Obviously, COVID threw a massive wrench in that equation. Same thing with 2021, but like 2022, I did a 20-person dinner in Orlando 2 weeks ago. We're doing a probably 40 person happy hour mixer in Seattle next week. I just got off the phone with someone in Chicago. We're doing a similar mixer in Chicago and a private dinner in May. Austin is on my list. Like Austin and the Bay Area are the two next cities that I need to put real dates around sometime late spring. So yeah, I mean, that was the reason I started the group in the first place, to do the in-person deep relationship building. And like we didn't do any virtual events prior to COVID.
Yeah.
Obviously, we had to during COVID to like remain relevant. But coming out of this, I'm going directly back to that core focus. And like I feel like that missing need to me is, I mean, there's a massive pent up demand for the actual face to face, deep, like meet new and interesting people. I mean, there's still, I mean, prior to COVID, like there's no way I would have gone a year without meeting some of these founders. Right. Yeah. But like there's still founders that I haven't met 2 years ago that are in the group. And like that just has to change. Right.
So when can we expect the Geek Estate, conference?
I get asked that all the time.
I bet you do,
Yeah, I don't know. I think I haven't seen a market need to say if there's
you literally just said there's a huge pent up demand for people to come face to face.
Right, but our goal is to get kind of 10 or 14 people around a dinner table. Like that's our relationship building component that like we specialize in. Like the actual conference circuit, I mean, there's plenty of conferences out there. They're great, right? Like, I mean, there's Blueprint, there's CRE Tech, there's Inman. I mean, whatever industry you're in, there's already big, huge conferences that can gather hundreds or thousands of people. So, I mean, if I was going to do a conference, it would have to be small. I mean, frankly, the 1,000-watt Turn On conference I did, 5 years ago? Or
I don't remember.
Or 4 years ago? Yeah. That is probably really the only thing that I've ever gone to that I'm like, this is a super different than what most conferences is. It's small. It was like less than 100 people. So, I mean, huge props for the 1,000-watt guys to put that together. Yeah. And that was like a labor of love, right? I mean, there's no like business now. I guess they have their inside community. So I guess maybe now there is a business model that they could enable them to do that more often. But I think in general, if I can't do something better than anything else that exists, like I think you're overthinking it, dude.
I'm saying you have a community already, Geek Estate Mastermind, right? Just do a conference that's Geek Estate Mastermind members. Show up in Austin at this place from whatever Friday to Monday. We'll hang out. We'll listen to some speakers who are all members.
Can it be your unconference, like your conference?
Yeah, I would love that. I don't care about my doing it or not, but it seems like an easy thing. Like, hey, Geek Estate members, let's all get together in Austin. Like that's an easy one, man.
Yeah, I guess I'm wary of the time commitment on the production side of like executing that, unless it's truly a bar camp type thing where you literally just show up and like you make everyone else sort the day out as it goes. I mean, maybe
dude. I mean, we're talking about a bunch of startup founders and VCs and thought leaders. Like, we're not talking about random agents off the street, right?
So you're saying bar camp for PropTech?
Yeah,
like PropTech execs.
There we go. See, we're coming with an idea right here on the podcast. I think you should do a Geek Estate Mastermind get together. That's all, right? Just 3-day over long weekend, whatever, right? 3 days in Austin, in Dallas, wherever is easy, right? Denver in the summer, right?
Yeah, well, I will be in Denver in summer. So if anyone, maybe I should just make that a bigger thing.
Yeah, just instead of it being like all these like little dinners, just go. We're gonna have dinners too, but let's 300 of us get together. I mean, how many members you got?
We passed 500.
See, there you go. So
beginning of the year.
1 out of 5. So 100 people get together, at some Ramada Inn. It don't have to be fancy. You know what I'm saying? Anyway.
I'm in. I mean, like if it's an unconference and it's just the networking. I mean, that's what we're all about, right? I mean, the networking side and bringing diverse people to the table. Yeah, like, that's what we do.
Yeah, and then we can have fun with it, right? It's like you sell the tickets as NFTs, right? So when you show up, you have to scan your phone to show that you have the NFT. That's how you get in.
I do think one like gem exercise within the blockchain group should be, let's all go engage with, I don't know, a new community or some sort of kind of crypto NFT community, buy something together and just go through the process. I think that would be interesting. Certainly from my perspective, I'd be curious to learn how that actually works. I know like some people like you have gone a little bit deeper in the weeds than I have, or like Dave Conroy, I know is way in the weeds on that sort of stuff.
Yeah. But can't wait for Dave's presentation. That'll be fun.
I know.
Yeah.
But I think there's a lot of people like me that are more on the like need to wade in a little bit slower.
Yep. All right. Well, hey, Drew, thanks very much for joining me for this random and yet I think interesting conversation, because, you know, this is the most important industry kind of, I think, socially, politically, economically right now happening. You know, technology is a huge part of it. And Geek Estate, I mean, you guys are kind of the leading community, you know, of the tech-minded folks, the vendors at least, and some of the startup guys. And it's just really interesting to stay on top of what might be happening in prop tech, you know, in that area. So
yeah, happy to have you in the group as always.
Yeah,
and I mean, there is no conversation that's not boring with you involved.
Yeah, no, I appreciate that. So listen, if people want to find you, if people want to let's promote Gem a little bit here, right? You know,
it's just
King of the Shills. Do it up, man.
It's just geekestate.com as the landing page. And I mean, for those that aren't familiar of the core of the group, I mean, really the core of the group is it's a private community of more than 500 prop tech founders, executives, venture capitalists, and practitioners. But founders are the core of who we serve. So, I mean, 55% of that 500 is straight tech founders, usually mostly CEOs.
Right. And then random ass guys like me who just hang around.
Random ass guys like you.
And talk about various things.
Stir the pot.
Yeah, a little bit. And if people want to find you personally, where do they find you online?
You can just email me at drew@geekestatelabs.com
Right
or
on.
Twitter. Yeah, I'm not hard to find.
All right, right on. Hey, thanks again, Drew, for coming, and thank you all for listening and watching if you saw this on YouTube. And appreciate you joining us.